So we've been through the very basics of technical analysis. What is it? What's included in it? There's also videos on the break and retest strategy. There's also a video on the uptrend, trend, downtrend. So now let's go ahead and take a look at the candles themselves, right? So what do these different colored candles mean? So mostly you're going to see like a red and a green candle. But you can change the color of those candles according to whatever you would like. So we're going to start off with the very standard red and green candles and take a look at what they mean. So here on the red candle, what we have is an open price. So this is where the candles actually start, and it starts pushing all the way down, and this is eventually when it comes and starts closing down here. So what are these two wicks that you guys see? So sometimes you're going to see a very short wick, sometimes you're going to see a very long wick, sometimes there won't even be a wick. So what does that exactly mean? If there's a top wick, a lot of people call this a liquidity wick. Some people would call it a high range, high wick, a top wick, anything like that. But essentially the purpose of that is when the price opened up here, it went all the way up to this level up top. Now, if you're looking for a bearish candle, if you're looking for sell opportunities, this is where you want that top wick. And the reason why that top wick is important is because you're grabbing liquidity, you're grabbing money, you're grabbing momentum from up top here in order for this candle to continue pushing down. So sometimes you will see a very large wick and a very small body. That just means that there has been a ton of rejections. You have to realize with both of these candles here that at every single moment, there are people who are buying or selling. In order for me to look for a sell opportunity, someone needs to buy it from me. In order for me to look for a buy opportunity, someone needs to sell it to me. So there are people who are buying or selling up top here. There are people who are buying and selling down here. There are people who are buying and selling somewhere here, somewhere in the middle, and all the way down here as well. So there are people constantly in this market who are buying and selling. And so the bigger the wick, the larger these rejections are going to be. If there's a massive wick up top here, that would mean that a ton of sellers or buyers got rejected here. That's just more money that's coming right into this candle and the following candles. So that's the high range, and the low range is the lowest that price has been. So now in this type of candle, the next candle that you could end up seeing could be an exhaustive candle. So you have a very large wick with a very small body with a little bit of a bottom wick, which tells us that very soon there's going to be some sort of exhaustive move coming up. Or it could be a very large candle that follows right after. It highly depends on, first of all, the market session, whether it's a market open, somewhere in the middle of the market. Is it Asian session, New York session? Is it London session? The London and New York overlap is said to be the most liquid session. So that's where you're going to see a ton of volume kicking in. But pretty much the anatomy of a bearish candle is that it opens up here and it closes down here. And then there's ranges on the top and on the bottom, how many people have been rejected here, and the lowest that price has been in that range, or the highest that price has been in that range. Now coming on to a bullish candle here, so we have price that opens up here, same exact concept. Price opens here, closes up top here, but you have a high range and you also have a low range. So in this case, where this was the liquidity wick, it's the opposite for the bullish candle. So the liquidity wick is down here, where all these sellers are getting rejected, grabbing that momentum, grabbing that liquidity, grabbing that volume to continue to the upside and come back and test some high numbers and high levels or high prices, whatever you want to call it. So it comes back and tests us into that area, but we don't have enough volume to close up top here. So we come back and we close somewhere in this area right here. And then same thing, the following candle could have a ton of volume, so you could see a huge bullish candle to the upside, or it could have very little volume and you would see just a small candle with large wicks that are associated with it. But you always want to pay attention to where are the wick rejections. So is it at a key level where there has been a ton of consolidation maybe in the past somewhere here to the left, or is this just simply breaking out of, let's say, a resistance or a support area, making a bottom wick rejection? That's kind of telling us that there's not enough pressure for price to continue anything lower than that and then continue pushing back up. Same thing for a bearish candle, making that top wick into probably an area of consolidation, a major level from the weekly, monthly, quarterly, if you use that time frame, or the daily time frame levels. Is it making that rejection into that, or is it simply breaking out of a support area, pushing down and telling us that, hey, this is where all those buyers got rejected and we're pushing right back down after that level? So that's the very basics of the candle anatomy. You have in a bullish candle, price opening up on the bottom and closing on the top. And then on a bearish candle, you have price opening on the top and closing on the bottom. And then you have wick rejections that tell you whether there has been any buyers or sellers being rejected.